The news day continues here on One News Now. I'm Danny Laurel. Let's now take a quick look at the equity space. We are 15 minutes into trade. Now, after a few days of a rally, we can see quite the pullback happening here, but not that bad actually. We're still above 6,700 levels here. We're down around 0.3% in the past 3 days. Now, one specific sector that I want you to be watching out for, especially since yesterday, I'll pull out actually the 3 or 5 day chart so you can see how the metals index and mining index has been going. That's been up by a hefty 3%. This as the base metal surged over optimism on China's reopening, in addition to the low stockpiles there on metal. You've also got the likes of Nickel Asia yesterday. That was up by as much as 6.5%. In the past 3 days, it's up by a hefty 8%. Semirara as well, up by 3%. Nickel Asia was the sharpest since around August of last year. And I did want to take a quick peek at just copper as a commodity here. This after in the London Metal Exchange, it climbed to its highest price since June. That was yesterday. You've also got aluminium and zinc surging more than 6%. So a lot of optimism on the metal space. Keep an eye out for that. Now we'll be back with more news on the economy after the break. Keep it here on One News. And you're still watching One News Now. I'm Danny Laurel. Now, it's about 10 days into 2023 and so many updates already on the economic front. You've got even President Marcos Jr. coming fresh off of a state visit to China. And here to discuss what that means for the economy and more, we have with us Aris Dakanay, HSBC ASEAN economist. Good morning, Aris, and welcome to the show.
Good morning, Danny. Thank you for inviting me over, and I hope it's not too late to greet the team a Happy New Year.
It's never too late to have a Happy New Year. All right, Aris, let's kick off with the China issue. So a lot of eyes are on the reopening amid, of course, the rising COVID cases. But nevertheless, what does that mean for the Philippine economy, and how does that fit into what could possibly be a global recession puzzle? Does that circumvent the possibility of slower growth?
Well, of course, let's go first for the bigger picture. The bigger picture is you have the western part of the world raising interest rates at a very fast pace, at a very unprecedented level, and this will eventually bring in global demand. It will slow down global demand in a way, and we expect a trade recession to happen across the globe. But of course, with China finally reopening, this puts a floor to the global slowdown. We don't think ASEAN is impervious to the global slowdown, to the tech slowdown ahead, but with mainland China finally reopening, there is that floor that would eventually lift trade at a time when it's really much needed.
Okay, so very interesting that you've talked about trade now that we did also get the figures for November. Let's kick off with the export space here. Not a bad picture actually, up by 13.2% year on year. The estimate was 11.5%. You've also got imports falling 1.9%. The estimate was around 3%, and a trade deficit that's lower than expected. What does this mean? Is this a good thing that we are, let's say, importing less than expected? Is that a function of lower oil prices, or is that, going to eat into our capital formation?
It's actually correct, everything that you mentioned. so far, with global demand raining down, the Philippines is exhibiting a clear amount of resiliency. These pockets of resiliency of exports really booming. But to that extent, to how much will we sustain it? That's something that we need to monitor. But then again, because the Philippines is not impervious to these global challenges ahead. But of course, these upside surprises on exports and the downside surprises in imports is very much welcome. Bringing that current account deficit is really crucial to help sustain the peso, to help make this growth in 2023 be more sustainable.
Okay, so like you mentioned, no, this was a November figure, and it might be difficult to sustain. Tell us, what should we be expecting when it comes to trade in 2023?
So if you actually look at new export orders across the globe, in PMI new export orders across the globe, and particularly on technology, everything is actually quite dipping down at contractionary levels.
Okay.
So we do expect that trade, or at least demand for the exports of good, will actually decline come into 2023 when the lag effects of these interest rate hikes finally kick into the economies around the world. We do have to take into consideration that we did see a wave of rate hikes all over the world, and it's not just 25 or 50 basis points. It's very
Massive.
aggressive 50 basis points hikes. So of course, this will definitely take a hit on global demand.
Okay, and speaking of that, a lot were hoping that if, I don't know, the employment figures are a bit softer, consumption is a bit softer, that tightening cycle, at least over in the US, would be over, diba, by this year. But it doesn't seem to be the case. How much more can we take in terms of tightening this year?
So in terms of tightening, one thing that actually we need to take into consideration is that the BSP has so far been really on top of this inflation problem. The BSP has already raised rates by 350 basis points on a short amount of time, which is a really good thing, and kudos, a very good job to the BSP on that, to Governor Medalla, and they have continuously communicated well to the market. But we think the BSP still has more interest rates on the pipeline. We see the BSP raising rates by 25 basis points in the next 3 consecutive monetary board meetings until pausing at 6.5%. The reason for this is because inflation in the Philippines is currently the highest in ASEAN, and with risks dominating still on the upside for 2023.
Okay, so 3 more rate hikes on the offing to the tune of 6.5%. How will this 6
yes.
Yes, but how would this eat into the growth story? You've got some analysts looking at as low as 4% growth for the Philippines this year.
So raising rates to 6.25% will be a big deal. Will be unnecessary, but of course there is this unintended trade-off when it comes to growth. To put this in perspective, the last time that the Philippines raised rates to around 6%, we grew between 1 to 4%. Because you have higher interest back in, I think, 2008. So these higher interest rates will of course delay the expansionary plans of MSMEs, delay the big ticket purchases of households, and of course will bite in growth. We forecast growth for 2023 to be around 4.4%. One, because investments and of course these big tickets purchases, the demand for these things get reined in, and as well as you have the lag effect of inflation. People have been dipping into their savings to be able to get by the high inflationary environment we have today. And of course, come 2023, come 2024, people will need to build these savings back up.
Okay, now you mentioned 4.4% growth, and we just had a governor, and you can see that on my terminal here as well. We just had Governor Medalla mentioning that he believes inflation may be closer to 2% as early or late as 2023, by early 2024, back to normal by the third quarter. And he did mention 5.5%, not that high in terms of rates if inflation is 8%. Tell us your thoughts on that. Do you agree with that 2% by the third quarter, or at least the end of the year?
We agree with we see the same thing with the
Okay.
BSP, that inflation will gradually go down to within target by, I guess, a little more delayed by the fourth quarter
Okay.
of 2023. But the overall inflation, we see overall inflation averaging at around 5%. So that's a 1 percentage point above the PSP target. And that's mainly because of the upside risks that we see today. The increase in oil prices, the steep increase in oil prices that we saw earlier parts of the year are still reverberating in the economy, making inflation sticky. You still have food inflation, which is currently the highest in ASEAN, still again reverberating in the economy, and may cause these indirect effects, secondary round effects that the BSP will still need to address.
Okay, sorry, Aris, no, just to clarify, you expect 5% inflation in 2023 and 4.4% growth. Does that mean, we will actually, in terms of real growth figures, not be growing this year?
Oh, sorry, 4.4% is real GDP growth.
Okay, got it. So above that, we add the inflation to that. That's how much we're going to be growing by this year.
Nominally.
Okay, nominally. All right, let's talk about the sectors here of the economy that will be resilient. Any parts that you're seeing that will be, at least, last year we saw the consumption story still strong despite the inflation. You did mention that there's a lot of revenge spending, but we might have more problems here in terms of dipping into our savings. What are you watching out for in terms of areas in the economy that could buoy us through?
I think the biggest thing to be excited about is, of course, tourism, because finally tourism is up and running. Most especially when you have your second top customer finally flying into the Philippines, and that's mainland China. Chinese tourists represent, I think, around 21% of tourists back in 2019. And of course, if you see those 21% of tourists finally enjoying the good food of the Philippines, the nice beaches of the Philippines, of course, that will instill jobs, that would instill income, and that will of course buoy growth. But one more thing that I think people need to be excited about is just the export of services in general. So what's happening in the globe right now is when the pandemic hit and people were in lockdown, what they did was they were buying, instead of one monitor, they were buying two monitors. They were buying goods from online shopping. But then again, with the lockdowns down and people are finally out and about, people will be demanding less of goods but more on services, which is something that the Philippines is very good at.
Okay, so two bright spots here. And finally, on the infra project plan, no, you've got President BBM saying we need to push, especially for that. How do you see that going this year, considering we have quite some pandemic-induced debt to still pay? How are we doing in managing our debt versus government expenditures in the at least Build Better More program?
So, historically, to put the big picture on it, historically, the Philippines has really been lacking in terms of infrastructure. So anything that would continue this infrastructure agenda is very much welcome and is very much needed. It's just a matter of looking for funds to be able to pay and continue this infrastructure agenda. And I think the administration is already on top of it by fast tracking the tax reform that it has in the pipeline. It's planning to raise taxes through the single-use plastics through mining. I think the administration is also revisiting the taxation on automobiles, and of course, the administration plans to continue packages 3 and 4 of the previous administration. And instead of being revenue neutral, I think package 4 will have some parts of it that would be able to raise revenues, up until 2023 and 2024 to hopefully close that fiscal deficit down while continuing this ambitious infrastructure agenda that the country really needs.
All right, so hopefully we have some revenues and more tax collections to fund that growth. Thank you so much for those insights, Aris Daconay, HSBC ASEAN economist.
Thank you.
For more updates, visit News 5, the Philippine Star, and Business World online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.